We're going to do a market update for October of 2025, and a lot of the market updates that I do are localized to like the North Idaho area, and not all of you are in the local area, so let's talk a little bit more broader spectrum of across the country. So right now the number of home sales continue to be higher compared to last year. Right now we're seeing about 1,100,407,000 sales. Okay, the sellers are still continuing to make price cuts across the board, and we're starting to see some home price growth. It's moderating. So if you look back to July of 2024, there's about a 4.2% appreciation. And July of this year, of 2025, was about 2.3% appreciation. So while the national prices continue to climb, local market conditions have become increasingly fragmented. This regional divide is expected to continue influencing price dynamics and sales activity as the fall season gets underway. That's straight from Anthony Smith, who's a senior economist at Realtor.com. So what is all this meaning to you? Well, it really depends on what area you're at. If you're in Tampa, Florida, like you're seeing year over year changes like drop dramatically. If you're over in Cleveland, Ohio, the other side of the spectrum, you're in a great spot where the year over year changes in home prices is over 4.5%. And somewhere in the middle is Washington, D.C., which is extremely boring. So we hear a lot about Fed cuts. Is this going to blow up our real estate? What's going to happen with Fed cuts, and what can we expect? Well, the inflation remains elevated. Period, folks. I mean, we could stop right there, but that doesn't really explain a lot to you guys. So unemployment's still holding steady. Job growth is starting to stall out. So what we're seeing is right around the 50,000 mark, whereas you look back a couple years ago, we were up at like the 500,000 mark of jobs. So according to NPR, the Fed faces another rate-setting decision in 4 weeks. And policymakers would like to have up-to-date information on hiring and unemployment. And that's really going to dictate what the Fed rates do. Now, as we know, or maybe you don't know, I'm going to maybe drop some knowledge bomb on you, that even though the Fed rates may come down, that may not take our mortgage rates down. The mortgage rates are they're tied more to the 10-year Treasury bond than they are the Fed rates. But the mortgage rates could come down, and a lot of it has to do with what I was talking about with job rates and inflation and everything else. So where we're at right now, we're hovering low to mid sixes, okay? And some of the predictors like Fannie Mae forecast is showing that this time next year we might be below 6. Wells Fargo forecast, they're sitting a little bit lower than where we're at, closer to the 6 mark, 6.25. MBA forecast is saying 6.4. Reality of it is there's not going to be a lot of movement. And on a 30-year fixed, we might see it bust down just below that 6 mark. If you're waiting for mortgage rates to drop into the 3s, please don't behold your breath. We don't want to call the ambulance. That's not going to happen. It's not going to happen, at least in my lifetime. You can see some gray here. I don't think that I'm headed to the funeral home just yet. However, I've got some good years left in front of me, and I don't think we're going to see 3s ever in my lifetime. Probably not 4s either. Okay, so I've been saying this for the last year and a half. Mid 6s, get used to it, get comfortable with it. The 40-year average is 8%. Sure, we saw this wild and crazy 2.75 that your Uncle Bob over in Toledo has, or maybe you've got a 3% mortgage rate or something, but that's not really a predictable outcome. So overall, if you look, the mortgage rates, they trend right along with the 10-year treasury yield, and we've seen approximately about 2% difference. So if the mortgage rates are at, or excuse me, if the treasury yield, the 10-year treasury yield is at 4.2, we're probably going to be at like 6.2 with mortgage rates. And that's just, I mean, that's just how it works, folks. The treasury yield does have a forecast to come down. And so we should see mortgage rates come down. But if it means, should I buy now or should I buy in 6 months to a year from now? Crunch the numbers. Because at the end of the day, even with low appreciation, 2%, okay, let's say 1 year on a $500,000 home, you're going to see, what would that be? $10,000 in appreciation on a $500,000 home. Okay, and that same home, that same size, you might be paying $2,000, at least around here, for rent. And that's a really easy number for me to use. So we're going to use that. You might be paying a little bit more, you might be paying a little bit less, but let's just use $2,000. So if you waited 1 year for the mortgage rates to come down, you're going to lose on a $500,000 home with boring appreciation of 2%. If appreciation is a little bit higher in your area, then you're going to lose more than this, but you're going to lose $10,000 in appreciation. That's perceived value. Okay, you're going to have to pay more for the house, 2% more for the house next year. So there's 10 grand that you've lost because you wanted to keep renting. And you're going to be paying rent, which does not go towards your equity, right? So $2,000 a month for 12 months is, by my simple math, $24,000. So there's a difference of about $34,000 if you wait for a year and hope that mortgage rates come down. The other thing, if mortgage rates do come down, that appreciation number could skyrocket. So let's say you're tootling around and you're waiting, and the mortgage rates dip down to 5.75, which I don't think they are, but they could. They dip down to 5.75. Well, you and everybody else that's been on the fence about buying is going to run out and go buy a house, which means more competition, which means values go up. And instead of that $500,000 house now costing $510,000, it might cost you $525,000, which that's not a huge difference in your monthly payments. However, in your equity, you lost another $15,000. So all these are really good factors to consider. There's a lot of people that are on the fence about buying, and at the end of the day, it's hard to know what the mortgage rates are going to do. I tell people, I say, don't hope for the mortgage rates to go down. If you're in a position to buy and you're going to be in a house in that area for the next 3 to 5 years, it makes sense to buy. I don't see the bottom tanking, at least in our area. And so go out, make that home, start making it your home, build some sweat equity, and stop waiting, because it is way too hard to time the market. It's impossible to time the market. You see plenty of people talking about that. So if you've got questions about the local market, hit me up. You can always send me a DM, 208-215-4637. But if you want to stay tuned for more tips, more market strategy, or more market updates, smash the subscribe button, hit the notification button so you get notified when I put out a new video. We're always bringing you new content. BK knows the way.